So we have economics review on different questions that might, that we have challenges on before the exams tomorrow. So it's just like preview on what we might see tomorrow in the exams. So the first one here, they said the chart shows Austria's net monthly balance of trade in goods and services. We're talking about balance of trade. We're talking about the difference between exports and imports. So here they said, with reference to the chart, explain one likely cause of the deficit in Austria's balance of trade in goods and services. So what will bring about balance of trade? Balance of trade is about exchange of goods and services. But as soon as these goods and services are exchanged, it leads us to what we call the balance of payment, which is the record of a country's transaction, not financial, the records of a country's transaction with the rest of the world. Part of the current account is where we have the financial account, the capital account, and the current account. I think you're getting the point here. So what are the reasons why we could have deficit in our balance of payment current account? One, it could be fiscal deficit. When we talk about fiscal deficit, it means government spending exceeds government revenue. So one of the reasons why we could have a deficit is because government continues to spend more than what it earns. Do you get it? So that's one of the reasons for balance of payment deficit. But now let's go back to balance of trade deficit. So for balance of trade deficit, I'm just going to talk about balance of payment and balance of trade anyway. So for balance of trade, which simply talks about export and import. If we are having a balance of trade deficit, it simply means our imports of goods are more than the exports or greater than the export of goods. One of the reasons why we could have a deficit in the balance of trade is that our exchange rate, the value of imports becomes higher on goods that we really it's inevitable for us. So if these goods, we have to buy them irrespective of, that means we're talking about price elasticity now. So one of the reasons why we could have a deficit is the elasticity of the goods we're talking about of imported goods. So if the price of imported goods are high, but those goods are goods that we can't do without. So it means irrespective of what the price are, we have to buy. So continuous purchasing of those goods will bring about a trade deficit. Get the point here? A country might have a deficit in its balance of trade because it does more of imports based on the fact that import has inelastic demand. So the demand for import is inelastic, which means irrespective of the price, we have to buy these imported goods. So, and when we continue to buy them, the value of importation continues to rise. So that will bring about a deficit in our balance of trade. That's one. Another reason why we could have a deficit in our balance of trade is the quality of domestic products. So if the quality of domestic in relative to international in relative to foreign products. So if the quality of domestic products are lower, so it simply means we can't do with that. We can't continue to purchase goods that lack quality. Yeah. So we have to increase the same products from getting it from abroad. So that means we continue to buy more from abroad based on the fact that the product here that is the same lacks quality. Do you get it? So the quality, domestic quality compared to, in relative to foreign quality might be the reason why we do more of imports. So we do more of import because the quality of imported goods compared to domestic made goods is higher. Do you get the second point about that? So you just have to develop it. It's about quality here. So that means we're talking about foreign firms. They produce better quality product than what domestic firms produces. So that's another reason why we could have trade deficit in our balance of trade. Another reason is inflation. If there's high inflation rates in the domestic market, it means prices are high here in relative to other countries. And maybe countries like Germany or other countries are witnessing a low inflation rate. So it means goods from abroad will become cheaper than goods from domestic goods. So a high rate of inflation, a high rate of inflation in the domestic market in relative to foreign market might bring about more importation. Okay. So we do more import because domestic inflation is higher compared to the global inflation rate. Do you get that point? Another reason why we could have trade deficit is about productivity. Domestically, our productivity is low. If we have low productivity, locally, it simply means firms here will be incurring more cost. And when we compare the productivity of foreign firms in relative to productivity here, if productivity is higher in other countries than what we have here, it means prices become cheaper there, and that increases our imports than exports. And note this, so whatever I have talked about, I talked about low productivity. Low productivity will bring about incurring more cost, which makes the prices of goods and services here increasing. So that means we won't be able to do exports. Imports become greater than exports. That means about trade deficit. If inflation is high here compared to foreign countries, it means the price of our export goods will high. So we will be less internationally competitive. So that means even the local consumption, the domestic consumers will prefer to buy from abroad. So everything I've talked about here reduces exportation from our country and increases importation. And when importation increases, it affects exports. So that will bring about a deficit or a worsening balance of payment current account. So balance of trade will lead to balance of payment because all our transaction has to be paid for through the current account. Is it clear? So any question about balance of trade deficit now? So we talked about low productivity, which could mean that incurring more costs in this country. We talked about, we didn't even talk about exchange rates. So for the exchange rate, if the exchange rate increases in this country, it means prices of imports become cheaper. As a result of that, we'll do more of imports. And that might also bring about...
Export becomes cheaper, right?
Imports become cheaper. Because when the exchange rate increases, it means few domestic currency will buy more of foreign goods. So that could also bring about trade deficit. I think it's clear. Any question about trade deficit? And what else can we talk about a deficit here? What else? Yeah, that's all. Because at the end of it all, everything we've talked about will lead to withdrawals. And withdrawal is one of the reasons why we have deficit. I think it's clear. Any question about deficit? No, good.